Alright, here we go. Hello, I am Matt. This is my first stock speedrun for the weekend of January 15th, 2022. If you are unfamiliar with what a stock speedrun is, you can check this video description for an explanation and also a disclaimer as to its content. That's enough talking. Let's see what we got here. FS Bancorp. So it's obviously a bank, probably a local bank. Where does it operate? Already I'm liking these numbers. Pretty good leaps in year-over-year earnings and revenues. Well, except for 2018 into 2019, revenues went up. They seem to have a little struggle getting earnings, but they came back in 2020. Very nice. So far, 2021 not looking too hot though. I wonder what's with these last two quarters, and we can find an article for that. First Security Bank of Washington State, or are we talking DC? I don't recognize any of these cities. I know Puget Sound. That's Washington, right? Mountain Lake Terrace, Washington. Yes. So bank out of Washington State. I want to see latest earnings report. Oh man, this is gonna be a rough match. Oh. Actually, yeah, let me take a look at this Zacks article. There we go. So that beat estimates, even though it was low? Actually, yeah, I wonder why the estimate was low. Because look, estimate was low in the first quarter of 2021, and they completely blew it out of the water. But the estimates didn't increase much after that. They kept them low. I wonder why. You know, the quarterly earnings of 97 cents per share. Yeah, that looks right. I wonder if these earnings numbers are correct. How many shares are there? That should tell us something. I just want to make sure that the earnings aren't slowing down anytime soon. Shares outstanding, 7.71 million. So with, that's a, well, actually no, that's, actually yeah, that's right. That makes sense. Actually, you know what I just realized? These charts are not to scale. These charts are not to scale because if you look at this blue bar, this earnings blue bar, compared to this earnings blue bar, you would think that this is like, that this one here in quarter one is like 5-6 times more. No, it's not. Look, 11.88 million versus 8.55 million. It's not that much of a drop. Similarly, the difference between 2018 and 2019 isn't as big as the difference between these blue bars would suggest. It's only 2 million. So you know what? I don't think I need to investigate that much. That's not really that much of a concern. Earning surprise. A quarter ago, it had 96. Belongs to the Zacks Bank's West Industry. Yeah, what does Zacks think of this in general? Placed an emphasis on earnings estimates and revisions to find strong stocks. Currently sporting Zacks rank 2 of buy. Ugh, this is the circular Zacks logic. Hey, this company is a watch. Why? Because we say it's a buy. Well, why do we say it's a buy? Because we like watching it. This Zacks circular logic. Forward PE of 9.79. Compared to the... Actually, that's not bad. Let me take a look at these statistics again. Forward PE... Well, okay, yeah. You can say forward PE is 9.56, and that's not bad. And it's better than the industry average, but at the same time, trailing PE is less. So the valuation is going to get worse. Is going to get... What's a good word for it? I don't even know what to call this. It's going to get less... More diluted? You're getting... less, most likely less earnings per share in the future. And you know what? What's stranger is that this seems to be this is a pattern for the company. Look, trailing PE is less than forward PE, going back as many quarters as this chart can go back without having to pay for Yahoo Finance Plus. Well, isn't that interesting? Also, at the same time, the trailing PE never seems to change all that much. And I may be wrong, but I'm pretty sure trailing PE is the actual PE at the time. Forward is projected, and whatever they project, it never comes to fruition. Yet they still always project something much higher. Okay, that's interesting. That's interesting. So some things to question, but nothing I outright dislike so far. Let's see, what else can I find here? So let me browse through these a little more, and then I'll switch over to maybe seeing what Conversations has to say. Hedge funds are buying Bancorp? Ooh, you know what? I should look at the historical chart for this also. Let's take a look at the year chart. Wow, that hasn't really gone. Actually, no. Well, okay, if I switch to the 6 month, I could say it hasn't really gone much places. If I look at the one... Wait a minute. January... Oh, sorry, I got confused. Yeah, it hasn't really gone much places since March of last year, but it had a decent uptick in early last year. I wonder if that's due to this earnings here, because this seems to be really good. And then it kind of started to trail off from there, because even though this scale isn't exact, it's still, you know, it's still not as good as this quarter, or maybe even this quarter. Well, that 5 year, what does that look like? Again, a lot of up and down. If you had held it over 5 years, you would have made not even double your return. Which honestly isn't that great. It looks like a healthy company, but for some reason, chart does not go up. Let's see what Conversations has to say. If it ever feels like taking me there. This is not Conversations. You're showing me that this Conversations tab is outlined, but you're not taking me there. What do I want to Google? I can't really think of anything in particular that I want to look up, honestly. Is this it? Just one comment? Yeah, it's just the one. Housing market is stable. Well, that was 2 years ago. It's gotten hot recently. I can't think of anything that I really want to look up aside from FS Bancorp Outlook. No, well, ooh, dividend? Has a dividend? Oh, wait, what's this? Stock split. 2-for-1 stock split. In the form of a 100% stock dividend. I don't know what that means. 100% stock dividend. Distribution date, each shareholder receives 1 additional share of stock for each share. Yeah, that's what a split is. But what is it talking about with a 100% dividend? Number of issued shares is doubled, and the price per share at which, well... Yeah... Number of shares is doubled, and the price per share at which a stock trade is expected to be reduced by approximately 1/2. Was it, though? When did this happen? Record date is 7/06/2021. Does the chart adjust for that, though? That's what I don't know. 7/06. What is that, July? So right here is when it happened, and the price didn't move. Well, that's interesting. Price didn't move. So whatever the new valuation with the double amount of shares, I guess the shareholders thought that that was a fair valuation. That kind of makes me pretty enthused. Because even though in theory the market cap of the company just got doubled, shareholders were like, no, yeah, we think this is fair. And I wonder if they were to do it again, if the shareholders would think it's fair. It makes me think that I was about to say non-change, but that's a stupid way to say what I want to say. The stagnation. Let's say the stagnation of the share price is not due, I think, to the actual underlying value of the company. It is due to it being a smaller company that is not often traded. As you can see, when I first loaded up the page, the trading from Friday, there was like 5 or 6 trades. I noticed that. Because when all of a sudden they issue double the amount of shares and the valuation of the company effectively doubles, nobody cares. Nobody freaks out saying it's not worth this, and nothing changes. Which makes me think that the reason why this stock simply hasn't gone anywhere is because people just aren't paying attention to it. It is too small to be on people's radar and for people to freak out about and be buying and selling shares of it constantly. So that's what I think about that. And it almost makes me want to say that it's a buy because its true valuation has yet to be realized, but that forces me to decide what its true valuation is, and that's a little bit harder to get at. If you were to get more traders, more people piling on in this company, then you might be able to figure that out. Again, I've said before in the past that I don't like companies that trade infrequently because it's hard to get a constant, reasonable measure of what their true valuation is. And I know you can make the argument that, oh, well, that's not how value works. Value is decided at time of trade. Whatever the last price something traded for, that's the fair value. And yes, that is true. But it's not helpful for finding patterns, determining future prices. That's what constant trading is good for. It lets you see patterns more easily, and it gives you more information with which to make decisions. So do I want to hit this buy button? I don't know. Because I can still see it going sideways for a long time. But then again, it could also get attention on it tomorrow. And people could realize that it's not a bad company they should buy and they could go to the moon. I don't know. So you know what? I'm not going to hit buy. Well, I'm kind of torn between buy and hold. I'm going to hit hold. I'm going to hit hold because if you have it, most likely you've bought it at this level. And I think the chance of it going lower is extremely low. I was trying to think of a different word. I was trying to avoid using low twice in the same sentence. I need a thesaurus here in front of me. But yeah, I think the chance of it going lower is low. But the chance of it going higher, I think, is much more impactful. Hence why it's a hold. Because again, that's if you don't own it. If you don't own it, don't buy it. It's not worth the risk because it could just end up sitting here at this level for years to come. But if you do own it, go ahead and hold on to it. I don't think you have much to lose. Aside from the missing out on chances to put your money elsewhere, which is questionable in today's market, to be honest. So yeah, I think hold is good for this. I liked all the numbers. I thought its reaction to the stock split was promising, and I think the only thing holding it back is lack of attention. So that's what I think. That's my take. That's what I think. That's my think. That's I take. No, that's my take. That's what I think. I can't talk properly, and I'll see you in the next one.